inflationary pressures have been rising, and this is something that the BOJ board has been getting more and more vocal about. So why wait until January, in your view?
Yes, I think the market view is divided between December and January as for the timing of the next rate hike. But I expect that the timing will be January next year. I think that the stronger yen, appreciation of the yen, could slow the pace of rate hike for the Bank of Japan. And yen appreciation could change that picture of the prices. So, as I mentioned, that the price is increasing rapidly. It's increased at 2.8% in October, which was released today. However, I think that was, influenced by that sharp increase of the imports price. That was a temporary factors. Excluding that food and energy, core CPI increased only 1.7%. I think that the core trend of that core inflation is declining. And if that the yen appreciate, imports price start to decline, that pushes down that the trend of that core inflation rate. I think that's going to be an obstacle for that early rate hike of the Bank of Japan. So in this way, I think that the change of the direction of that currency market could slow the pace of rate hike. That's the reason why that I expect that January of that next year could be most likely timing of that rate hike of Bank of Japan.
Takahide, I wanted to pick up on what you were just talking about there in terms of the currency, because when we saw the July decision, there was the mention of the upside risk to inflation. That wasn't in this particular monetary policy statement. But as the yen strengthens, right, and as you were just sort of saying as well, that means that the import part of the inflation will come down. So the question is, in terms of the demand-driven inflation, is that strong enough, or do we need to see more data in terms of wages in particular?
Yeah, I think, as I mentioned, that the high inflation rate in Japan is mainly caused by that cost up type of that inflation rather than that demand-driven type. Also, that the second quarter GDP increased and consumption recovered a little bit, but still that the fragile trend is likely to continue. Under the condition, I think that it's not easy for that companies to increase that transfer that increase of cost to the prices. And as for the service prices, BOJ is particularly paying attention, but it's not to increase accelerating. So there's no clear evidence that the sharp increase of wages has start to increase at the service price sharply. And that the situations, if that the yen appreciation of the yen continues, I think that the imports price decline rather sharply. So I think that could push down that the inflation rate trend. However, I think that the BOJ is likely to increase at the interest rate because at current level of the interest rate is quite low, even if that the trend of that inflation rate is not the 2%, but the 1%. But anyway, BOJ is likely to increase at the interest rate. However, I think that it's not likely to increase to that such as a 2%. If that the BOJ achieved that 2% inflation goal, I think that the terminal rate of that short-term interest rate could be around 2%. But I think that the trend of the inflation rate is much lower than 2%. I think it's like 1%. In that case, I think that the neutral level of that short-term interest rate or terminal rate could be slightly less than 1%. So I expect that the BOJ will increase that interest rate January and June of the next year, and 0.75% could be a peak of that interest rate. So if that is the case, I think that maybe rate hike is not undermining that the Japanese economy, because its level is still low. I think that it's not a threat to that Japanese economy, but it's have an impact to that currency market. It could lead to further yen appreciation.